Good morning, students. Today we are going to understand about the admission of partner in the partnership account. So when a new partner enters to the business, some adjustments the old partners must do in the partnership account. The existing partners have to do that. Actually, the old partners, they used, what is that? Agreement. Again, the new partners, after entering to the business, they have to use fresh agreement. So for that, the assets and liabilities should be revalued. So in this admission of partnership account, we are going to see this heading only, revaluation accounts. The assets and liabilities are in which way revalued by the older partners. Okay. What are the purposes to this revalue of assets and liabilities in the partnership accounts? That we have to understand first. If you revalue the assets and liabilities in the partnership account before entering the new partner, we can understand the fair or else truthful profit of the business. The same times, the existing partners revalue profit or else loss also, they can understand. So for the purpose of this, they are preparing the revaluation accounts. Okay. So what's the meaning of revalue? Re-estimate. Re-estimate. Value again. So we have to value again. Already we given one value. Example A, B. They are existing partners. We are running one business, partnership business. Before 5 years or else 10 years, they bought some assets and liabilities. Now what is the value of assets and liabilities? The same values we cannot be given nowadays. That means the current affairs. Because this value, the assets and liabilities in the business, that's already we purchased before some years. Now we are expecting the new partner. So when the new partner enters to the business, we have to show the value of assets and liabilities, current value. So determination of current value of assets and liabilities is called revaluation. Revalue of assets and liabilities. We are giving revalue. You understand? Okay, so this is the revalue of assets and liabilities. So for that, some procedures, they introduce some accounts to find out the revalue profit and loss. So the format, you see this format procedures, here no place to write, only I use the dollar. Therefore, the short form, T form I use. So here debit, credit. Okay, left hand side debit, right hand side credit, and heading revaluation account. Particulars rupees, particulars rupees. This is the procedure. These procedures we have to be followed. If you follow the procedure, you will get 1 mark for it. Sometimes the answer is correct, but procedure is wrong means definitely you cannot get any mark in the business. Okay, the partnership accounts, when you prepare, you have to understand the procedures. What are the procedures for preparing the fixed capital accounts and fluctuating capital accounts, revaluation accounts, and partners capital account and balance sheet? These procedures first we have format. We need the knowledge. So now you see this. In the revaluation account, when we revalue the A, B, the existing partners in the partnership business, they are going to add one new partner to the business. Now they have to revalue. So how to prepare, how to show the value of assets and liabilities. So the credit side, you see the assets. Example, before coming to this point, I have to explain one example. Before 5 years business, we purchased machinery for 1 lakh rupees. Example 1 lakh. Okay. Before 5 years, what's the value of this machinery? 1 lakh. 5 years we use this machinery. Now we are going to add the new partner. We are going to close our old agreement also. We are going to start the new agreement. So we have to show the value, new value. What is the value of machinery now? Before 5 years, 1 lakh rupees. Now the machinery value is the same machinery value. Now the current value. What is the value of machinery? So it will decrease or increase. That net value we have to use in the revaluation. Before 5 years or 10 years, that's we not need. But the old value. Okay? Old value. Now the current value. Book value and current value we have to differ. Difference has to take to these accounts. Book value 1 lakh rupees. The current value is 20,000. Current value 20,000. How much value decreased? 80,000 decreased, the different value. Okay, before some of the years, when at the purchase time 1 lakh, after 5 years 20,000 only, decreased 80,000. So assets decreased. Machinery is one of the asset now. So asset decreased 80,000. We have to show in revaluation account debit side. This value we must show to the revaluation account debit side to machinery account 80,000. Why? That is the procedure. The revaluation account 20,000 and the current value, book value 1 lakh rupees. So 80,000 is decreased. Assets decreased. Assets decreased means there is loss item. The revaluation account is called another one equal to this revaluation account. That is profit and loss adjustment account. So here we must take the assets increase or decreased. Assets increase means credit. Assets decrease means debit. That point you must understand. Assets increase, you have to be credited in the revaluation account. Assets decrease, we have to be debited to the revaluation account. Assets increase, credit. Assets decrease, debt. You understand? Assets increase, credit. Assets decrease, debit. Okay. Now you see that second point. So assets I told increase credit, decrease debit in the revaluation account. Okay, clear I think. Next, the net decrease of liabilities. The liabilities increase. What's the meaning of liabilities? The business must owe to others. Okay, by that our credit amount will be increased. So that is one of the liability. So here the liabilities increased. Debit. Assets increased. Credit. Liabilities increased. Debit. Don't confuse here. Okay. So assets increase. Credit. Liabilities increase. Debit. Liabilities decrease. Credit in the revaluation account. If you understand these 4 items, easily you can report the revaluation account: admission of the partner, retirement of the partner, admission, retirement, and death of partner. Whatever accounts comes, you can report easily. Okay, assets increased, credit. Assets decreased, debit. Liabilities increased, debit. Liabilities decrease, credit. Finally, whatever items increase, decrease, we have to enter debit and credit side. Finally, if you balance the accounts, which side is highest amount? Sometimes credit side is more than debit, that is loss. Debit side is more than credit, that is profit. this profit we have to divide according to the ratio. When the partners ratio, old ratio 3 is to 2, AB old partners, their ratio is 3 is to 2, means we have to divide this profit according to the ratio. After this, profit or loss must transfer to partners capital account. Okay students, so I think you understood everything. uh, Now place to write and do the problems here. Next class I will explain every procedures of preparing capital, partners capital account with revaluation. Okay students, thank you.